A string of IPOs are aiming to make their mark on our stock market, which seems to be turning from bullish to a little bearish now and then. How might these new listings affect investor sentiment, and what influence might they have on biz confidence? Deva Ellapala is Managing Director and CEO of Acuity Stockbrokers, and he's here this week on Benchmark to shed light on those issues and more. Good to have you on the show once again, Deva. Welcome. So, how is the stock market faring these days? It seems to be going from bullish to bearish now and then, isn't it?
I think, yes, that is what we're seeing currently, where there's some kind of correlation starting to begin to come into realistic levels of market P's and stock P's aligning according to the performance of companies. So, yes, I think the market is going to consolidate, and we're not going to see the phenomenal growths of the index we saw in 9 and 10, in 11 and 12. So, it will be, I would say, in the range of 20 to 30% growth per annum that we can look at.
We've seen a string of IPOs in the market as of the recent months, with Expolanca being the most recent, where some have sat through the market well, some have not done as well as expected. What impact are these IPOs actually having on the market and also on investor sentiment?
Well, it's a chicken and egg situation, I think, because most of brokers have been saying we need more companies to come into this BOZ to make it more attractive, to have more depth and breadth in the market. So I think it's the opportunity for the issuers, I would say, to come into the market when the markets have performed, so that they can realize their value in terms of sell downs and unlocking their values. So I would think it's a welcome thing that we're seeing IPOs coming. When we see one or two IPOs coming on a month, activity levels gets a little sluggish, and that is why you see the market having movements and lackluster sometimes in certain times of the market. But I think overall, on the long term, in the growing of the market and taking this market to the next level, I think IPOs are of is a paramount importance towards the growth of the market.
Now, the Securities and Exchange Commission have been introducing a number of new rules and guidelines in the recent months. Practically, how effective are these, and what are the negativities that have emanated from the price band?
As markets grow, I think regulation has to also come, I would say. In most markets, we've seen over-regulation sometimes when the markets go up in this kind of a phenomenal growth of 100% and in excess. So I would think it's kind of automatic in terms of regulators' point of view to come in and, I suppose, butt in terms of various aspects of the market. But I think there has to be a second phase of re-regulation, where they scale down the level of regulation once they see that there's some kind of justification, some kind of sanity that comes into market. I think which we have seen, I think, recently by the regulator, where they came and reduced the number of days of the certain stocks getting into like locked in kind of thing. Maybe what in some of the other markets we don't see locking periods of such long periods. So maybe that's something that I think we have been talking with the regulators, see whether they could just do a like a cooling off period rather than a locking period. And hopefully, if the regulator does so, I'm sure market will appreciate it, coming from a fully highly regulated to a kind of a re-regulation and a more practical regulatory aspect of it, so that there's a balance.
Deva, the LMD Nielsen Business Confidence Index in recent months has proved to be very stable, unlike the market's indices, which, like you mentioned, have been having its up and down movements. Would you say there's a strong correlation between business confidence and also the market indices?
Yes, there is a definite strong correlation, but I have not actually followed, like you said, is Nielsen's confidence index as opposed to the correlation with the market. But definitely business confidence is a definite indicator of the positive sense of the market. If there is confidence lost in the business aspects, and the business community, I'm sure it will, and it does reflect in the market. I think the business community is very positive in the medium to long term. I think if you look at most of the companies are now, they're getting out of their shells, and they're investing in improving their production lines and more capacity. Hotel sector is coming out the woods. We see a lot of investment coming into increasing the number of rooms. Some hotels are just shut. If you've seen recently, some groups have, when they're shutting as long as 12 to 18 months, So that means they're into serious investment. So I see they've been positive and in the medium term, whereas the market, like I said, for reasons like IPOs coming, get into a little lull sometimes.
We take a quick break now for some messages from our sponsors, and when we return, we tune in to Deva Ellapola for more on the buzz in our capital market. Stay tuned. Thanks for staying with us. You're watching the Big Picture Business Program, and we continue with more views and insights from Deva Ellapola. The Nielsen Company Lanka's managing director says in the forthcoming LMD issue that the government can do much more to bring in the private sector into its development, mainly infrastructure plans. Now, he's referring particularly to investment opportunities. Do you actually hold the same view? If so, what is the impact that will have on the bourse?
Perhaps yes, we can improve, I would say, the level of confidence and the level of opportunity that the private sector could harness. But having said that, I've seen most often than not the government saying, look, the private sector has not come out enough. For example, we had a hotel sector conference about top 6 months. They said, well, we see the batsmen padded up, but they're not coming out to bat. They're not putting their dollars or rupees on the line and saying, okay, we are investing. The opportunity in the right way should be offered, in a more I would say consistent manner, either policy wise or even the terms, whatever is offered. And then I think it will be, the investors coming. But having said that, recently we saw foreign hotels that are committed to come and invest in some big brand names that have committed to come and invest in Kalpitia and in Colombo. So those are signs of good, I would say, a commitment coming from abroad with foreign investors. So I hope we can retain this kind of interest that is coming our way and not let it go. And as I mentioned, be consistent. We need to be consistent. If we're not, no matter whether it's foreign or local investors are not going to come out there and put their money on the table. So,
what are the hot picks in your opinion?
You should follow the fundamentals still, as you would see, but sometimes you see quite a bit of speculative shares have been in the forefront if you look at even the increases. But if you look at the performances of the profitability of the companies, interestingly, I was looking at some numbers, and we have sectors that have really performed like telecommunications, the construction sector, manufacturing sector, and the trading sector, and power and energy. So we've seen quite a bit of other sectors than the traditional banking and the sectors that were performing in the earlier. We see the stocks that perform are not the traditional fundamental stocks sometimes. So we should look out for, I think, the new stocks that are performing well in the up and coming sectors, like I mentioned. So I would not pick a particular stock, but I would say look at the sectors that are going to benefit from the economic growth, which we have seen.
So why would you say there is this movement into the non-traditional sectors?
As you would see with the war, we didn't have an opportunity for other sectors to, you look at manufacturing, you look at the cement, related stocks. We didn't have an opportunity. Then you look at the hotels, no one looked at it. So then the telecommunications, the telephones, with opportunity in economic growth, whether it is, everyone has a cellular phone, whether it is the person who sells brick or cement or sand or whatever, has a mobile, and they use the mobile to the, so developing the business across the board rather than into a specific area only. You see the other stocks like the smaller cap stocks or the mid-cap stocks, which had been in the doldrums, now showing up. Then you saw the poultry-related stocks, which was never looked at earlier, with the tourism picking up, and then the GDP. So there is more consumption of chicken and the food items like that. So that sector started moving. We just seen today the land and property sector, which have been in the doldrums, again showing signs of moving up gradually. So I think likewise that's the reason the other sectors are being looked at rather than traditionally banking or finance or whatever.
So despite that, Deva, private sector commercial banks have been having a good year. Their bottom lines have improved by more than 50%. And with the new tax cuts, I believe the financial services industry is going to see even a better year ahead. So are we right in saying that sector-wise, the banking sector is holding lots of promise, as well as the tourism and hospitality sector?
Yes, definitely banking and finance would be anyway in the center of all this activity, because economic activity revolves around the banking and finance ultimately. They need the capital, they need, okay, you can go to equity market, but you need to balance and have a good gearing. So you have to have some loan capital. So I'm sure the loan growth will pick up. I think it's in the pickup, and we see in the recent banks announcements of rights issues coming up, and saying there is pent up demand for the loan growth and the loan book to grow. So I'm sure when you see that kind of funds that is being collected by the banks and the lending increases, which was not in the past. If you look at the last year, the growth was about 2009 and 2010, it was just starting to pick up. We didn't see a phenomenal growth. So but now, since the banks have come out and shown that there is growth is picking up, the results can be, like you said, better in the next year. And maybe you can still count on having about 25% of your portfolio in the banking and finance sector.
So where do you see interest rates heading this year and also early into the next?
We saw a glimpse of slight edging up of the interest rates, I think, about a couple of months ago. But I think with inflation being kept on check, as we discussed earlier, I don't see a major increase. We looked at 6 months Treasury bill rate around 9%, maybe around the 2009 late 2009-10 kind of thing, but I don't think we see a 200 basis points kind of thing increase. If at all, we are looking at maybe 20, 30, 50, maximum of 50 basis points, if at all. So I don't see that as a major threat to the market, because market returns will be much higher.
And that concludes our interview with Deva Ellapola. It's time now for a quick break for some messages from our sponsors. When we come back, we investigate what measures may be in the offing to curb the threat of excess liquidity. Stay with us.